Josh. I've been a professor for about 30 years and a CPA for about that long, and I've got fantastic ways to explain accounting. So welcome aboard. Today we are studying the cash flow statement and investing activities. We're taking it one section at a time, and as you probably know by now, there are three sections to the cash flow statement: operating, investing, and financing. We're looking at the middle section, investing. With investing, it's usually a pretty easy section, but you have to be a little bit like a detective, so go slow and cautiously and it won't be too bad. So here's what I have for you today. I've got a balance sheet here for you. A balance sheet with long-term assets. We are focusing on long-term assets. When you hear that word investing activities, you think, oh, investing in Microsoft, investing in Apple, or investing in Amazon.com. That's not what we mean, although it could mean that. But we mean investing in our own business, buying property, plant, and equipment, buying fixed assets, equipment, buildings, land, usually pretty big things. So we are focusing on the long-term assets here, folks. So let's see what's going on here. We have equipment, and at the end of the prior year, equipment was $20,000, and at the end of the current year, it's $25,000. So equipment increased by $5,000. So we have to figure out, well, what happened? Something's going on in the equipment account. It kind of looks like they are buying equipment, but we have to be a little bit careful and cautious. So what we need to do is we need to go and find other information. Either go to the general ledger, look up the journal entries, talk to people, look at documentation, whatever it takes to figure out what happened to the equipment account. So I have some other information over here on the left-hand side. More information. So let's see what's going on. Equipment was purchased for $5,000. Well, that explains the $5,000, but this is a cash flow statement, so we have to focus on cash. So here's what's happening. Fred paid $1,000 cash and a $4,000 long-term note payable. Now, since this is a cash flow statement, we're going to focus on that $1,000 cash. So to put it all another way, I know here the change was $5,000, but we are focusing on the cash, the $1,000 cash here. Now the $4,000 long-term note payable, that did not involve cash, so we are going to ignore it. Years ago, when I first started doing these cash flow statements, many years ago, we would have to write this into the cash flow statement, but not anymore. And I think that's a good idea because cash flow statements are about cash. So coming down our balance sheet here in the long-term assets, the next category here, the next account is accumulated depreciation. It was $10,000, now it's $12,000, so it increased by 2. And that's all fine and dandy, but we are not worried about accumulated depreciation. In fact, 99 times out of 100, it's best to totally ignore it. The reason why is we're interested in depreciation expense, and we get that off of the income statement. Depreciation expense, and depreciation expense goes in the operating section of the cash flow statement. Now, sometimes in your textbook, there'll be authors that will make up problems where they don't tell you what the depreciation expense was, and you have to figure it out by looking at accumulated depreciation. But that is not very realistic. That's not really how accounting is done. At least I never did it that way. And so 99 times out of 100, just ignore it, unless your author, tries to pull something on you here. So coming down to buildings. Buildings was $50,000, now it's $70,000. It looks like there was an increase of $20,000. So maybe they bought a building or had an addition. Who knows what? What you have to do is look at other information, look at the general ledger, look at journal entries, talk to people, look at documentation. And so let's go over here to the more information, find out what happened. So it says number 2 here, building addition, $20,000 cash. So apparently they built a new wing of a building, a new room. They did something for $20,000 cash. And this is a cash flow statement, so we are going to focus on cash. So going down to land. Land was $30,000. It's still $30,000. No change in land, so we don't have to worry about it. Coming down to the patent. Patent was $8,000. Now it's $6,000. It decreased by $2,000. So something's going on with the patent. Either they're amortizing the patent or they sold part of the patent. Something's happening. So again, you'll have to look in the general ledger, journal entries, talk to people, look at documentation, whatever it takes to figure out what's going on. And for us today, I've got more information here. So number 4 here, patent was amortized by $2,000. So that explains the $2,000. So we don't have to worry about that today in the investing activities. That patent amortization goes in the operating section. Today we're focusing on investing activities. And finally, down to investment in subsidiary. At the end of the prior year, $80,000. At the end of the current year, $78,000. So this investment in subsidiary declined by $2,000. So something's going on with the investment in subsidiary. And here again, look in the general ledger, journal entries, talk to people, find out what happened. So we've got some information right here. So number 3 here, subsidiary accounted on the equity basis. So if you recall the equity basis of accounting for investments, whenever the parent company, which is Fred in this case, Fred Snowblower Service, whenever the parent receives dividends, you deduct out those dividends. And whenever the subsidiary earns net income, Fred would claim a portion of that. Now, in this case here, the subsidiary had a loss. So Fred's share of the subsidiary's net loss was $2,000. So according to the equity basis, a net loss rather than a net income, we would deduct that from the investment in subsidiary. So $80,000 minus the loss of 2 gives you 78. So that explains the $2,000. Now this is not going to be listed under investing activities. It gets listed under operations. All right, so we get to ignore that. So the only thing that we have to worry about here today with investing activities is actually the equipment right here. Now the equipment increased by 5, but we're going to focus on the $1,000 of cash here. So $1,000 cash. The building, there was an addition to the building of $20,000, and we have it in the other notes that they paid $20,000 cash. This is a cash flow statement, so that's what we're going to list. So coming down to the cash flow statement, as you know, the cash flow statement's got 3 different categories, folks. Here we go. We've got operations, we've got investing activities, and we've got financing activities. So here's all we're going to do. We're going to have purchase of equipment for $1,000 and the building improvement for $20,000 for a use of cash in investing activities of $21,000. Now, a lot of times on these cash flow statements, you'll see instead of purchase of equipment or building improvement, it'll say capital expenditures or capital improvements. I've seen sometimes too. But here today, for purposes of what we're doing, I'm listing it all out separately. So as a review, now today we're not studying the operating section, but as a review, what goes in the operating section of the cash flow statement? Net income, and we have to add back non-cash expenses. We add back losses, deduct out gains. We have to look at current assets. Did the current assets go up or did they go down? And act accordingly. Did the current liabilities go up or down, and then act accordingly? So that's what we do. And if you're confused about all that, go back and watch the videos on operating activities on cash flow statements. Cash provided by financing activities. Well, this has to do with long-term debt, borrowing long-term debt, or paying back long-term debt. And it also pertains to owner investments or owner withdrawals, any transactions that involve owners. So folks, I hope this lesson helped you out. If it did, let me know. Hit that like button and subscribe. And let me know so that way I will make more of these videos for you. Until next time, over and out.